Looks like we're getting there. Everybody's wandering in here. Welcome, welcome. I'm gonna say I can tell it's a beautiful day across the country because the numbers are light today. People are like, I'm outside. Spring has finally sprung. Give me an opportunity. Oh, man. So welcome to everybody. Thank you for coming in. I want to thank Home Depot. I want to thank our main sponsor. Appreciate them being here. Ooh, we're flipping quick. Thank you for allowing us to participate in this, and thanking them for helping us so we can be here to participate and provide benefits for everyone. As well as our other sponsors. There's a number of folks that we have, but especially want to thank Home Depot on that. Today we've got a little bit of a shorter meeting. Got a short legislative update for you, just a couple of things real quick. And then we're going to get into the man with the money and get into Jason and kind of talk about his unbridled wealth prospect, and get your questions ready. You can queue them up, shoot them in the Lori, and we'll get them to ask her these questions and get them through Jason at the end here. So with that, welcome. I do want to give a quick disclaimer. You always have to give the disclaimer. I often play a lawyer on radio and television. I am not one, nor are we giving financial advice. So please consult your own attorneys. We are just trying to help and advise, but we are not giving advice. So with that said, please make sure you do your own due diligence. On the legislative side, real quick, let me just mention a couple of things. We are working with Housing Coalition on two different pieces. There's a piece, and I sent a quick reminder out to our leadership on this. Both CFPB and HUD have an open request for comments, and we are going to be following up with them. I'm not going to go into it right now. Part of it is, hey, you don't need background checks. What do we need those for? That's overrated. Yeah, I wish I were joking about that. I have to laugh at it a little bit because otherwise you just sit there and kind of pound your head. So that is part of what we'll be working on. We've got some final statements we're getting close to with both NAA, NMHC, Realtors, Home Builders, all of that. So that will hopefully be a voter voice piece that will be turning on. Not only will National REIA be signing on to it, but we'll also be reaching out to you guys to do a couple of emails in, and those emails will actually go into directly to CFPB, will actually go into HUD directly based on this regulatory request for comment. So with that, there will be more to come on that. I was hoping to have some final numbers for you on that, but so that's where we're at. I do have good news and an update. We've been working on getting the Affordable Homeownership Access Act introduced. Andy Barr just introduced it yesterday. Then kind of the reason that's important is he's also on the main committee that does it, and he introduced it with Vicente Gonzalez. So you have a Republican and a Democrat bringing a bill in that is now in the House, and we understand it will have hearings. That's a step because normally it's been trying to get it in. We are also having discussions with the Senate and working through having a bipartisan introduction in the Senate. We have a number of senators who will move forward. The senators are a little more, I'll say, turf conscious. And what I mean by that is if this is a banking and finance issue, which it is, before any of them want to sign on, they want to make sure that the banking and finance senators have signed on as well, or at least one has. And so we are working through those kind of processes and go through. Ideally, within the next month or so, we'll be doing that. I know there's going to be another meeting, some series of meetings in early June in DC on that. So we'll be working and following up with you on that. But that's there will be a voter voice coming out on that as well. We've got some comments. We're waiting for a HR designation as well. And then that will be coming out to say, hey, this bill's out here. Please co-sponsor it. Please ask your congressman to co-sponsor it and start building some traction with it. Going into hearings, it would be great to have 20 to 30 co-sponsors on it. And by maybe the end of the year, if we could have 50 to 60, we would be in a good position to really see this moving forward. So one of the nice parts is we're in the early part of the session. So we get to December. it rolls into January and we keep going. It's not like we're starting fresh with a new bill. So we want to keep building this. We're early in with bipartisan support, committee leadership interest. We're actually hoping to make some progress on this one. So look for some information coming out on that. And like I said, sharing that out. So two problems and one good piece. So with that, hopefully it's not two steps back, but we'll see what we can do about getting some communications out there, and look for emails from National REIA on voter voice communications that you can do both on HUD, CFPB, as well as asking for co-sponsors. So that's where we're going to be. That'll probably be the majority of our summer, is pushing those out and making sure not only do we do them, our family members do them, our business associates do them, sharing them out so that we get the word out. That's really what it takes to do this. So you'll see more coming on that very soon. All right. With that, that is the last of the legislation. Well, okay, I have to say it. In Shakespearean words, to default or not to default? That is the question. And since that's all anybody else is talking about, we're not going to go into that issue, because if it happens, well, hold on to your financing, literally. But that will be a different issue, and we will have to roll with the punches on that. But we'll see what happens. Don't be surprised if there's I would say midnight, but it might actually be a 12:15 solution, because the clock gets kind of pushed back as they get more and more desperate and things get more pressure. So we'll see what happens. But if there is information coming out on that, we will be sharing that out. Just FYI, it's not clueless on that. It's on the radar, but it's also such a large and dominant issue that it is something that, frankly, we're just going to be watching. It's not something any of us can weigh in on, and it wouldn't matter if we did, because they're going to do what they're going to do. This is the point where elephants are fighting and all the mice kind of scurry away, because until these egos get done, folks, wait and see what happens to our country. So we'll see what happens there. But if you want to make sure that you've got financing in place, if you want to make sure that you are prepared, there are some ways to do that. We've been trying to provide different assets or the aspects of that, facets of it here. And to that end, Jason is joining us. Jason is going to be on our Alaska cruise later this year. I would love to be like, hey, get on this, but we're kind of at limited space, right, Jason? Congratulations, good draw. But with that, there's a little bit of limited space and kind of some wait lists. So if you are interested in going to Alaska and the Alaska cruise and hearing from folks like Jason and others, reach out to Lori. She can do some of the wait listing. But with that, Jason, let's talk about some unbridled wealth. Let's talk about some good news and how we can take care of our own future.
Hey, thanks, Charles. Yeah, I'm excited to be here. I love doing these, and I love working with real estate investors. I'm going to get my slides queued up here and see if I can share this. Somebody give me a thumbs up when you see my screen here. All right, got it. Okay. So yeah, I am this year have partnered with the National Real Estate Investor Association, and I'm excited to kind of roll this out over the next year and get to your local REIAs, and hopefully I'll be seeing and meeting you guys face to face around the country over the next year or two, depends on how this lines out. But it's an exciting time. So my role is, I like to say, all things infinite banking and life insurance related. So infinite banking concept, education, and implementation, which I'm going to unpack a little bit of today, and life insurance, disability income protection, even annuities. So I just wanted to kind of spend a little bit of time today unpacking some of these and show you what we have and what resources you have available to you. As mentioned, if you didn't, was anybody here at Winter Conference? A few of you. Okay, Winter Conference was fun down in Fort Lauderdale. Got to speak down there a little bit, and that was a fun time. Coming up, the Alaska cruise, get on the wait list, just in case. You never know, it's a little ways away still. So maybe kind of like playing the lotto, right? And get on the list. Let's see what happens. Anyway, it sounds like a great time. I'm honored to be speaking there, and we've got quite a program planning for you guys for that one. So that if you need to go, you can go on the National REIA website. Obviously, you can go to nationalreacruise.com/Alaska-cruise for that. Hopefully I'll try to be speaking at your local REIAs over time. And then certainly I will meet with you one-on-one. You don't have to sit and wait for me to come to your REIA or partner with your REIA. So if you're a REIA leader, give me a call. Let's get a time on the books this year. And teach you guys about this infinite banking concept, or teach you guys why life insurance even is important. So a little bit about myself. Briefly, I am a multi-business owner. I have a couple of different companies. I've had a sporting events photography business for 20 plus years now. We have done national sporting events around the country for USA Gymnastics, a lot of big organizations like this. I've had that for a long, long time, and it's been a fun industry to be in. And see all the changes over time. I got into real estate investing back in 2008, 9, 10 after the market crashed. And I was watching friends and family lose their homes. And I was convinced, I was like, man, there has to be a way. I was baffled at the fact that one of them in particular, he nearly had his home paid off, right? And he couldn't pay the bill and the bank took the whole thing, right? And I'm like, now wait a minute. This can't be right. There's got to be a different way. And that's what got me into real estate investing. I was like, man, there's got to be a way. And lo and behold, right, you don't know what you don't know. And then once you get into it, you're like, oh, dude, there's so many options. Even if you're not going to get to keep the home, you can still avoid foreclosure. So there's just so many options. So that's really what got me into it. And then I'm an authorized IBC practitioner, which is infinite banking concept practitioner. I am specialized in that field, which I'll talk about today. It's not just a title I get to give myself. I had to earn that title. So it's fun. It's neat. It's something I wish I knew about the minute I got into real estate investing, or even before that. So we'll unpack that a little bit today. I have a passion for teaching real estate investors because I have done real estate investing. I love it. I love doing it. I'm an opportunist. And so my real estate investing these days is as opportunity presents itself. I'm not out doing it actively. I started out, again, back in 08, 9, 10 into wholesaling, got into fix and flips, worked up to buy and holds, bought a rental property, Airbnb out in Southern Indiana. And that opened up an opportunity for we picked up a 170-acre former camping and recreation area. We start working on that. I turned that over, seller financed it to some new guys that are going to take it even bigger. And so I've just gotten to work on all stages of real estate investing and have just learned a lot on the way. I've learned the hard way in a lot of ways. And so I can definitely tell you what not to do on some things. So anyway, so I'd love to challenge the status quo and where we put our money, right? We are taught a certain way on what to do with our money. And few of us have asked questions on what to do with that money. And we just kind of go with the status quo. And I'm going to do that a little bit today, is challenge you. I'm going to challenge your thinking, like, is this what we should be doing with our money in general, right? We also want to challenge you to think long range. A lot of us, even in the real estate sector, we're in a hurry, right? Especially if you're in the wholesale and the fix and flip side, you're in a hurry. We want to get stuff done fast, right? We want to get the deal fast. We want to turn these deals fast, and so on and so forth. But the majority, some love they're going to stay wholesaling, they're going to stay doing the fix and flips, but the majority want to transition into long-term planning, right? Buy and holds, commercial, multifamily, whatever, and so you're thinking long range when you get into the buy and hold side, right? You're thinking, what is this property going to do over time? How do I generate passive income, right? But then the minute we turn around with earning money anywhere else, we forget the long range thinking. And we put it out the door and we're like, yeah, but we need the more money now. How fast can you give me a high rate of return? And we get impatient with it on any other department of our money. So I want to challenge that thinking a little bit today too. And I love it. Change the way you think about your finances and it will change your life. I promise you. Okay. So I want to just talk about a couple things real quick. The need for life insurance. I'm not going to camp here, but it's a vehicle that's safeguarding real estate investors' wealth, right? It provides a financial safety net to your families, your business partners, prevents the burden of sudden financial instability, debt, and you can keep the business going. If something happens to you, you can at least not create a financial crisis for those who are left to deal with that debt. If you're in the middle of a couple of really big deals and you are wildly uninsured, you're in a high risk. You're a high risk for your family. So you always just want to make sure you have appropriate coverage, right? And certainly for legacy, if you have kids and people who depend on you, it is essential to get proper coverage. So that if something, we don't walk around being paranoid, right? If something were to happen, you're covered, right? And there's various kinds of insurance, and that's a side point, but it's just, how do we safeguard ourselves, our assets, our families, protect ourselves with all the debt we're racking up, with the deals we're doing, and are we in a good spot? So that's something I love to help people talk through, figure it out. We do financial reviews. We do, what's appropriate for you. What do you need right now? It's also a need, I believe, most of us have a need for disability income protection. It provides financial security for us to ensure that continued income, even during disability, right? If you can't work, you get injured and you can't work for X amount of time, what happens? Does everything go sideways? So I think it's important. We always think about life insurance. We spend more time, true story, we spend more time shopping for underwear than we do picking out proper life insurance or proper disability coverage, right? And car insurance is important. And if we think our car is important, isn't our life more important? So why not insure our life more important? Disability protection even. It's not always about, well, it's expensive, I can't afford it. It's not always true. I think it's an assumption often. So it's just a good thing to look at and consider. Is it appropriate for you? One, but what are we protecting, right? Are we protecting, I've got all of these deals going, but I have this income that's necessary, or I have my day job that's kind of funding these deals. And if I get injured and can't work, what happens? Does everything go sideways, upside down, out the door? Just a consideration. We also have a need for controlling the banking function in our lives, as I put it, right? What are we doing in real estate? Most of us, we're aspiring for passive income, Nelson Nash says, if some authoritative power distributed all the money in the world equally among all the people in the world within 10 years' time, 97% of all the money would be back under control of 3% of the people. Why is that? That's because they understand money and how to get it to flow to and towards them instead of away from them. It's true. So I would ask, who's really in control of your money? What's your money doing? Is it the credit cards? Is it the mortgage? Is it a business loan? Is it a car payment? Is it other personal loans, student loan debt? What's the common denominator in all of this kind of thing that controls our money? Is it the banks, right? It's the banks. So why wouldn't we want to be in control of our money? Like, what would it look like if we controlled that banking function, if we became the bank, so to speak, right? Nelson Nash, he goes on to say, learning to control your money is the most profitable thing that you can do over a lifetime. I am wholly convinced of that. You learn how to control the banking function in your life, you will set yourself up and the next generations behind you in a different position. So it's just changing the way we think about our money, right? So there's generally three types of people, okay? If you've been on a call with me before, I talk about this one a lot. Okay, there's the debtor. Let's think of a car. You're going to finance a car. You're going to go into debt, right? And you're going to pay it off over time and get back to zero. Let me pull this highlighter up here. So we're going to finance a car. We pay it off over time. Then we get back to zero. And then we finance another car. We pay it off over time, get back to zero. And this is what we do throughout our whole life, right? The saver does the opposite. He says, I don't want to go into debt over it. I'm going to save up until I have enough for that car, and then I'm going to buy it. And that's fine. So we save up for it, buy the car, account goes back to zero. We save up for that next car or the next thing, spend that money, go back to zero. We do this throughout our whole life, right? What I want to show you is how to become what I call the wealth creator. It is where you can create this financial velocity that can literally last for generations. And that is not fluff. It can last for generations if you do it right. And if you teach that next generation how to take control of it. So debtor, saver, wealth creator. Which are you? Which do you want to become, right? The vehicle through which we show people how to do this is, we call this the infinite banking concept. So it is taking control of the banking function in your life. This book, I keep a copy of it here because I reference it all the time. I reference this one so much, I've cut this, I don't know if you can see me or not. I cut the spine off of it and I spiral bound it because I'm always in this book and I've got stuff marked and underlined and highlighted and I'm using it all the time. I'm teaching it every day too, but it changed my life. I'll put a link later on, a place you could buy this book. I highly recommend it. It's only 92 pages long. Read it. Okay. The vehicle through which we teach people how to do this is properly structured, dividend paying whole life insurance from a mutual carrier. And that's a mouthful, but I'm wordy about it. I'm particular about it because it's not, as I say, your grandparents' old life insurance policy. It is not the life insurance policy that certain financial gurus rail against weekly. It is structured different. When you hear these guys on radio and what have you railing against a whole life and it's a ripoff, they are misrepresenting it and they are explaining classic structured whole life insurance. And I would in part agree with their opinions for classic structure, but we are taking that structure and changing the structure of it. So properly structured, dividend paying from a mutual carrier. As I said, so there's two types of insurance companies, stock owned and mutual carriers. Stock owned companies, insurance companies, it's interests are for the stockholders, right? So how can we make money and pay the stockholders? Mutual carriers, basically as a policy owner, you're one of the owners of the company, thus entitled to the profits, which come in the form of dividends. So that's why I say dividend paying from a mutual carrier. So anyway, all that to say, this is not just, hey, go get a whole life policy and you can bank with it. It's not that simple, right? It is properly structured and it is structured to something that's appropriate for you that you can afford. There's nothing worse than being insurance poor, right? When you're stressed and having to write that check every month, you're like, how on earth am I going to pay this bill? We don't want that for you. The idea is to get ahead, take control of the banking function, not be stressed about it. You know, you should be celebrating writing that check every month. You know, how much more can I pay in? Can I pay more this month? I have people calling me monthly. How much more can I get in my policy today? You know, because they get it and they're seeing it work. Okay. It is not some financial hack. Okay. It's taking control of the banking function in your life. It really is. I can't say it enough. Okay. I'll say it again. It's the best place to warehouse your wealth that has guarantees, safety, and providing ready access to your money, allowing you to take over the banking function in your life. There are guaranteed growth components inside of these policies that are not market tied. We're not talking about an investment product that is at risk. So it's safe and there are guarantees to it. Okay. And ready access to your money, unlike certain qualified accounts, for example, you are not penalized for accessing the money. You don't have to wait till a certain age. When there's cash value there, it's accessible. Okay. And we structure them so you have cash value day one, not sometime down the road, years later. Okay. And the objective is to use it for ways that are going to make you money or save you money. Okay. And that's how we get out of the same old, right? The financial dilemma where we feel like we're always in with the banks and with debt and how do we get ahead? And I love this quote by Einstein: we can't solve the same problems by using the same kind of thinking we used when we created them. How do we change the way we think about our money? And the more we understand, the more we start getting it, and the more we go, oh, okay. I need to do this different. Okay. Let me give you a couple of benefits, not benefits, but this is why I like this vehicle so much. Okay. Inside the properly structured whole life insurance policy designed for infinite banking purposes, one of the major benefits is the cash value. The money inside your policy will grow uninterrupted throughout the rest of your life, even while you are borrowing against it and using it. Let me say that again. It's growing. The whole amount is growing. Even when you borrow against it, it'll grow as if that money never left the pile. There is no other vehicle out there like that. If you put money in your savings account, and say the savings account, the bank's going to say, we'll give you 1%. What are they offering right now? I don't know. They're going to say, we'll give you 1% return. Well, it's only growing what you left in there. So if you put 100,000 in the bank and it's sitting there growing at 1%, you pull 50 out, it's only growing off 1% on the 50, right? Qualified accounts, any qualified account that has a rate of return, it's growing on what's left in there, right? Retirement accounts, that's what we do, right? Think about retirement accounts. We build it up throughout our whole life. And then time comes for retirement. And we hope to God the market didn't crash the year we want to retire on that money. And then throughout the growth, and I should have put this, I have a slide that shows a 20-year history of growth in the markets. And just the peaks and valleys, right? It ebb and flows throughout life, and there's booms and busts and everything, and it's getting interrupted. My point is, it's getting interrupted. That pile of money you have in there is getting interrupted every time market growth declines. It's getting interrupted every time you withdraw money. Inside a whole life policy, it will grow uninterrupted through its whole life. You cannot interrupt it. Okay. There is income tax-free growth inside of a policy. There is a point, I'll show you an example here in a little while, where your cash value far supersedes what you've paid into the policy. That gain, if you will, is not ever going to be taxable because you will always access it as a loan. You will always borrow against the policy. And the IRS doesn't tax on loans. Okay. So you're borrowing from your own banking system, if you will. You can use it now. You can even use it to supplement retirement later, even on a tax-free basis when used properly. I say that because there is a way to really mess it up and create a taxable product, and we don't want that for you. Unless you're a nonprofit, then it doesn't matter because you can't get taxed. Okay. But the point is, it's not locked up. You don't get penalized for using it and so forth. It is safe from investment booms and busts. It's not an investment product. It's an asset. Life insurance, whole life insurance is qualified as an asset. Okay. Think about, if you look, banks carry billions with a B, billions of dollars in cash value whole life insurance on their executives and key employees. Think about that. Banks are not stupid. What are they doing? It is a tier 1 asset on their balance sheet. If you go and look up Bank of America, pull up their annual report, it's a tier 1 asset. It is one of the single most valuable things that they own. And what are they, why are they doing that? What do they know? Right? Fortune 500 companies, same thing. They're doing it. Why can't we do it? Presidents are doing it. There's a fun article on President Biden when he had to disclose his finances, talked about how he owns 0 investment products, but 6 whole life policies. And that's a head scratcher. You start going, well, the guy's not broke. What's he doing? You know? And so it's just neat. As you start digging around, you start seeing who's really using these things and what are they doing with it, you know? So moving on. Okay, when you borrow against the policy, it's not tied to your credit. The 2 people that know are you and your insurance company, and probably me because you called me to get the loan. Okay, it's not tied to your credit, doesn't show on your credit report. And actually, people who are utilizing it to build up wealth, It's not even reportable on your FAFSA. When you start applying for college, your kid's college, you don't have to report it on FAFSA even. So not tied to your credit. Unstructured loans, when you borrow against the policy, it is an unstructured loan. You get to decide the loan terms. You can decide, I'm going to borrow this, okay, I built up whatever. I built up 20,000 in my policy. I'm going to borrow 15 of it for a quick deal, down payment on something. And I don't want to pay myself back for 6 months. No big deal. Nobody cares. The carrier knows about it. The carrier knows you're good for it. Why do they do that? They know you're good for it because the death benefit is far higher than what you borrowed against. And if you were to borrow that money and pass away the next day, they simply reduce it from the death benefit and pay the difference to the beneficiary. Okay. So they know you're good for it. So it's an unstructured loan. You keep it out for a day, 10 days, 10 years, 20 years. Okay. There are a couple of caveats, which we don't have time to get into today, but you are charged an interest rate when they loan you their pile of money, but that's why your pile of money will sit and grow uninterrupted. However, your pile of money is compounding far greater than that interest rate. So it's outpacing the interest rate that is costing you, which we can get into, when we talk one-on-one or something and show you. You decide the loan terms. It is a financial safety net for your family, right? Because it's life insurance, which we talked about earlier. And the generational wealth transfer, you can set this up and get this going generation after generation after generation. Okay. We sit down and talk. I may unpack one of these here in a little bit. I tend to be long-winded, and so my 30 minutes is probably going to be gone here in a second. But that's why I summarized all of these. I was like, I don't know which one I'm going to have time for. So I love showing a particular debt recapturing strategy, how you can use it to recapture debt. So this client, he had $109,000 in bad debt, and this is not mortgages or cars. He had 109. This is credit cards, student loan, and personal line of credit. He's on a 30-year plan to pay it off. We did the math. It's going to take him 30 years. Okay. And he was like, how will I ever keep this up for 30 years? I'm going to bust my butt. I'm going to pay this debt. He was dropping like $2,000. He was dropping, I think, $1,900 a month on debt repayment. That's $2,000 a month he could be using for something else. So we sat and we looked, we got it all on paper, talked through income, expenses, assets, liabilities, goals, objectives, and look at the whole picture, right? And strategize with his situation, what works for him. And the big thing was, how do we change the flow of his money? It's all going out the door right now. How do we turn that around? And so by changing the flow of the money, and I kid you not, that's why I show this example so much. And we got money to go from bank account, instead of bank account to credit card, we got to go through a policy first. And we got him, instead of 30 years, we got him 9 years, 100% debt free. And he had $95,000 in cash value to show for it. So I say to people in situations like this, you're going to bust your butt for 30 years. And in the end, you're going to be, what will you have to show for it, right? You will be debt free. Yes, good accomplishment. You will be debt free. What if you could do it in less than half the time and build cash value at the same time? So you see, he's paying down his, let's see here. He's paying down his debt. If you can see me, he's paying down his debt and at the same time building up cash value inside a policy. And that's the beauty of it, right? You're building up cash value in this policy, but we're going to borrow and we're going to pay down debt, but we're building cash value at the same time. And it's all in strategy planning, right? In his case, we're moving the parts around, making the numbers work. He accomplished all of this without coming up with a single extra penny of income. Okay. This was all money that was already in-house being spent month over month over month over month. All we did was change the flow. Okay. And that's the importance of it. Okay. So I'll unpack that for you sometime if you want to meet one-on-one, or if you're going to be on the cruise, we're going to unpack a couple versions of that. I got a client I'm working with right now. I'm so excited to put it into a presentation form that's got $184,000 in bad debt. And we're going to get him 10 years debt free and have just under 100,000 to show for it. And it's impressive. And guys, if you're in a ton of debt, it is possible to get that under control and get ahead at the same time. Okay, it's not for everybody though. Some clients we work with and the situation is such, we just have to say, here's a debt reduction plan, stick with that for a year or two, and then we'll talk and come up with an infinite banking approach. Okay. Bank on your fix and flips. I have scenarios we show where you can integrate this, right? You build up cash value, and what's it look like, right? We're using private money, hard money, whatever the rates are right now, 10 and 2 and 12 and 4, and it's costing us a fortune, but we can still make money, right? So in this example, I show, the deal was $250 purchase with $35K in repair costs with a 3-month hold, $350 ARV. He was going to run about just under 20 grand in profit for that deal. Okay, modest. It was the first deal. And that was utilizing hard money and private money. And we were building up cash values. We look at it and we say, hey, what's it look like if we borrowed from our policy instead and funded the construction side? Still financed the purchase because that's larger money. And the construction side, well, then that profit actually jumped up to a mid-20s utilizing that approach. And then if he had enough to fund the whole thing, including holding costs, about $300,000 built up, his net profit would jump to about $37,000 just by using his own bank. So you go from 19,000 utilizing hard money, private money to 36K net profit utilizing your own banking system because you're recapturing that money. You're saving yourself on interest, certainly. And so I want to unpack that, but bank on your buy and holds. We've got an example here of a guy. He had built up 200,000 in a policy. Let me ask you a question. Just hold up your fingers. Let's see if I can see this here. If you have your screen on, or type it in the chat. Type it in the chat. If you had $200,000 and you don't live in Denver or New York or California, would you pay cash for one property, or would you put a down payment on 4? Right? Okay. Put a down payment on 4, right? We like leverage if we're taking the buy and hold approach. So in this example, he put a down payment. This was low interest rate about six months ago. Low interest rate environment. Math still works. 200,000 purchase price. He borrowed 200,000 from his policy and put a down payment on 4 properties. Finance the difference. Finance the rest. You with me? So we bought 4 $200,000 properties. 50,000 down per property. So now it's 4 rentals that are cash flowing, pulling in about $1,900 a month. And over a 10-year period, he was going to pay back the loan he took from his policy. So each property was going to pay its own $50,000 back. And by doing so, his policy over that 10-year period will grow a net $148,000 net after cost of insurance and everything. So talking to him was like, hey, we're not changing your real estate investment strategy. We're changing the flow of your money. You want to do rentals, do rentals. But by changing the flow of your money, you could turbocharge your strategy, right? And this was his example, plus all the home equity growth, right? What about commercial property? I love this example. If any of you are on this call and you're going to be in Denver, June 9th, please reach out to me. We're doing a special program for investment community of the Rockies, the local REIA in Denver. We're going to be doing a building tour of this building you see on the screen, plus 2 more, and showing the historic renovation that went on with these buildings, as well as how infinite banking played a role in all of this. And we talk about how the owner, he found out about infinite banking and he was paying the bank. Okay, he was paying A and B bank, and he said, what's it look like if I change the flow of my money and if I put it through a policy first and then pay the bank? Okay, he changed the flow of his money. Buildings like this, you are looking 15, 20, 30 years down the road. You are not looking at tomorrow, generally, especially after a historic renovation, right? You're going to recover that cost and all that. Rented the building out for the cost of the insurance. In 15 years, he'll have about 6 million in cash value built up. In 30 years, 15 million in cash value total built up that they will have been able to utilize along the way, right? These are larger numbers, but principally it works the same no matter how many zeros you're putting on a policy. And what can his business do with an extra 15 million bucks? A lot, right? It's going to help you just by changing the flow of your money. Even into retirement, you build that same policy I've been showing you, that same example. By retirement, this person will have built up enough to where he could supplement retirement by $100,000 a year, income tax free. He could do it for 20 years. That's 2 million bucks. And if he were to pass away, he's got a $2 million loan. They'll reduce that loan from the death benefit, and the beneficiary will still get $1.4 million after that. And there's not another vehicle out there like that. It just isn't. Because you always that income tax free. Let me clarify that again. I said it earlier. It's because you're accessing them as loans, right? You can withdraw up to the basis if you want, which we talk about with investment products, but you can withdraw up to the basis and then take loans. But really, fundamentally, take a loan, borrow against the policy. You don't ever have to pay it back at retirement. And we've done the math, right? So your policy may be different, maybe a different size, maybe 75,000, maybe 200,000 that you can pull out. Just how big is your policy by then? And then what do we do after retirement, after we are long gone? How do we keep this going to other generations? Right? And that's my favorite part of every program I do, is teaching how do we get this going intergenerationally. It starts with the first generation. It starts with you. If you don't start it, next generation probably isn't going to start it. You start it, you teach your kids, right? You get your kids involved, you get the family involved, you start your family banking system. And just a quick description of this particular strategy. There's lots of different names for it. First generation can get insure their children into this. That's the second generation. You have access to all the cash value of all these policies, you and the kids. Upon your passing, you fund the family trust. The family trust becomes the family bank that the family could then utilize instead of going to a traditional bank. Now you've got your private family bank in play, really. That trust can then begin purchasing policies on the kids, the grandkids, the great-grandkids. And the trust owns the policies, and the trust has access to the cash value because it's the policy owners. So each generation, that the policies on the generation that's passing away fund the trust even more. So each generation, that family bank, if you will, gets larger and larger and larger. And this second, third, fourth generation, they will never need to go to a traditional banking system, a traditional bank again. Get the family bank. How much interest would you save in life if you never had to pay interest to an outside bank again? It'd be a game changer, wouldn't it? You know, it's like my parents were in the insurance industry when I was growing up. I sat and showed my mom this about 5 years ago. She sat there with her jaw dropped the whole time. And she's going, they never taught us about this. We never knew about this. We sold life insurance, you know, and that happens all the time. I have 2 clients who are life insurance agents. So it happens, right? It's just, you're not taught how to structure them. You're not taught about what it can really do. You're not taught how do we control the banking function in our life, right? And it's a game changer. And I say that a little bit to say, like, when you talk to your friend, you're going to hang up the phone, you're going to call your buddy who's an insurance agent, you're going to say, I got 30 grand, start me a banking policy. And he'd be like, all right. And he'll sell you a policy. And not probably not to be divisive. It's structured wrong. I've had clients, they've done exactly that. And they call me 6 months later. They're like, I got this policy because my buddy and I left your webinar and I called him, literally true story. And one guy in particular in mind, and he called me and he said, my friend started this, I started this policy through my friend, but it's not working like you said it was going to work. And we looked at it and I'm like, man, it was structured all wrong. But now you're in, like, you're 6 months in, you've got whatever I think he had 25 grand into it. And you could see the color come out of his face. Because he was like, oh, shoot. So I say that to say, just move forward with caution or avoid that problem and just call me. We'll do it right for you. I will teach you the details of this. You think I'm long-winded now? Wait till you, I'll teach you the nitty-gritty of this. Okay. It's changed the way we think. Okay. I'm gonna bring this down. A couple of questions. If you have chat, type in the chat. Would you rather pay taxes now or later? Just type it, now or later.
How about never?
Never. I wish. Never. Now or later. Now or later. We did a poll for another REIA a couple of weeks ago. It was literally 50-50. Half wanted now, half wanted to defer. We're taught to defer our taxes, right? I'm not going to answer that question. It's just a question for you. Would you accept a 25% average rate of return on your qualified investments? Most of us say yes, of course we would. But do the math. And I say this all the time, do the math. Okay. What does it mean? 25% average rate of return. If I make 100% year one, lose 50 year two, 100% year three, lose 50 year four, what do I got? 25% average rate of return. What's that look like in dollars? Do the math. Okay. It's not always about the number. 25% sounds large. Great. Give it to me, right? Let's do the math. How is it growing? Is really the question. If you had $30,000, would you make more money loaning it out, amortized loan 6% for 5 years, or 4% sticking it in a CD for 5 years? 6% is more than 4. We tend to default to that because 6% is more than 4%. Do the math. 4% CD will outpace your 6% amortized. Why? Because it's how it's growing. It's not about the percentage. It's how is the money growing. Amortized, right? You're paying interest on a lesser amount every year, right? CDs will compound. The gains will compound on the new total the next year, and it'll be growing 4% more on the next year. That's exactly what's going on inside of your policy. It is growing uninterrupted throughout its entire life, and that's why it will outpace. Do you think taxes will go up or down in your lifetime? That's an easy one. We got 100% up on the last poll we did, right? I think that's fair to say to everybody on the call. And I question people. I say, just think about it. There's a place for it. But if you think taxes are going up in your lifetime, you are wholly convinced of that. Why would you want to pay taxes later on qualified money? Okay, let's talk about qualified money. I'm not talking about your real estate investments and deferring, because that's inevitable. Qualified, why would you rather pay taxes later if you are convinced taxes are going up? Okay, it's just food for thought. Why are we doing what we're doing? Are we just following the herd? Because they say put your money in a retirement account. And again, there's a place for it, but not all the time, because we have more options than that, but we're not taught the other options. Infinite banking concept. Okay, what ideas that come to mind? Most importantly, what are you going to do about it, right? And I asked people that. I said, what are you going to do about it? We get all this knowledge. You get all this knowledge, and National REIA does these programs for you guys, and all your local REIAs do all these programs, and you retain all of this information. And then how do you, sift it and act on it? Or is it just knowledge you're just going to sit on? I say it. I love this Hunter S. Thompson quote. A man who procrastinates in his choosing will inevitably have his choice made for him. So again, things like, if you're like, man, I totally need to entertain the idea of disability or life insurance because I'm wildly uninsured. Don't just think about it. Do something about it. At least explore and get an answer, whether you need it or not, right? And certainly the infinite banking and legacy. Okay. Thank you guys. If you want to reach out to me, you can reach out to me here. Is my contact information. You can scan that QR code. And would love to meet you, talk one-on-one, hear what your situation is, deep dive into any of these situations. Again, get on the waiting list on the cruise. This is going to be a great time out there, and hopefully we'll get to your local REIAs as well.
All right. Thank you very much, Jason. Greatly appreciate it. Or is handling any questions coming in. I don't see anything yet. So, but I do want to make a couple of quick comments for everyone. Some people have asked. Rebecca is doing very well. She's healing well from the surgery. Look forward to her being able to do cartwheels on stage. I'm kidding. She'll be back walking. That would be a good start. Walking normally. And we look forward to her healing. So keep her in your thoughts and prayers as well still. I do also want to mention on those issues I mentioned earlier, Real Estate Investing Today, our website that does the news aggregation. You can track that. We're going to be providing information there as well. But you'll also see it if you don't follow us on Twitter. Make sure you do. Please share those issues that we push out on Twitter. Brad works very hard to make sure those are provided out easily for everybody. So there's a fair amount of difficulty making sure you've got those things lined up and ready to go. So if you get the chance, again, Real Estate Investing Today. And then also checking out National REIA's Twitter account, being signed up for that. It'll be great. So with that, I'm back to wrapping up here for the day. So, okay. Jason, Kadia had a question on here. Maybe if you want to just.
How does this actually work? So truly,
simplest terms possible, Jason.
Yeah, truly, everybody different, and that is not just an answer to kind of skirt around, but everybody's situation is different. So it is strategizing with you in your situation, and then working together with you to come up with a strategy to implement infinite banking via a whole life policy. Maybe you can't be insured. We'll find other people who have insurable interest for you, and as a policy owner, you can access cash value. It works because life insurance companies, right, they offer term insurance, and that's what we're most familiar with. Cheap insurance with the high death benefit. Whole life insurance, classic structure whole life insurance, is where we pay a premium and we get a lower death benefit in contrast to the term. But at some point in the life of the policy, we have access to cash value. That's your classic structure whole life that we have a general understanding of. And that the gurus rail against on our financial platforms right now. And really trying not to throw somebody under the bus. But anyway, so, and then there's this type of approach to whole life, and it's structured different. It's introducing what's called paid up additions above and beyond your premiums. So it's restructuring the policy because you're buying paid up additions. The way we restructure the premiums, you're buying more insurance. Because you're buying more insurance, you have more access to cash value. It's also dividend paying. So we're directing those dividends that pay each year to buy more insurance as well. And so your cash value begins compounding year over year over year. That's the big picture. We can really
that's a good summary.
Dig into it, you know. It qualified money, you have to choose. By regulation, I'm not allowed to say, hey, take your qualified money and move it over to a policy, because one's an investment product, one's an asset, right? So you're talking two different things. So really the big question is, do we want to, does it make sense to, you know, because if you're not of age, right, you got penalties and taxes and you know, you got to talk to an accountant, you know, it's a bigger conversation than that. And sometimes I have both ends. I have clients who are going to fully fund their IRAs and do policies. I have some that have gotten tired of taking a beating. I had a meeting this morning. They've gotten tired of taking a beating in the market and they're done. And they don't care. And they're cashing out their retirement account and they're going to move it over to a policy, but that was on their own accord. It was not me trying to talk them into it. You know, so, but no, not a traditional rollover, like you would think a rollover.
Again, going back to the disclaimer side of things, encourage everybody to reach out to Jason individually. His contact information is on there. And if you're able to be on the Alaska cruise, I look forward to catching up with you, sitting out and having a longer discussion and some more in-depth issues on this. So look forward to that. Thank you, Jason, for presenting today. Greatly appreciate it.
Thank you.
Thank you everyone for participating and the good questions. We look forward to following up with everyone and keep your eyes out for updates coming out on not only National REIA's standard communication lines, but also through Twitter and some voter voice issues coming out. We look forward to seeing everybody. Everybody have a great weekend. Thank you.